In today's video, we're discussing the stock market. So the big question is, are we going to see a stock market crash on December 14th, or is it going to be a Christmas rally? December 14th is a very important day in the stock market. You know why? It's because December 14th is the Federal Reserve FOMC meeting. So if you guessed that correctly, congratulations. This means that on December 14th, the Federal Reserve is raising interest rates again. But it's going to be a very important date because that may be the start of the Fed pivot. So listen, I want to be very clear about this. I made a video just 9 days ago explaining the Fed pivot and when the stock market will have a sustainable rally. I'm going to leave a link to that video down below. So basically, to recap it very quickly, the Fed pivot will be in 3 phases. There's going to be smaller rallies in phase 1 and in phase 2. However, it's going to be phase 3 that triggers the start of the next bull run. So again, if you want more information on that, you should go watch that video. In this video, we're reviewing whether December 14th is going to be the start of the Fed pivot. We're talking about Fed pivot phase 1, day 1. So let's analyze. I want to set the stage for you very quickly so that we're all on the same page. Inflation peaked in June. So understand what I'm saying. Prices on most things are still going up. I'm talking about the rates of inflation. So prices are still going up. They're just not going up as fast. In June, the rate of inflation was 9.1%. In October, it was 7.7%. So listen, I am fully aware that those are understated government figures. So I know that. I'm with you. So please do not get triggered. So inflation is high, but it's decelerating. So let me ask you a question. Do you know how the Federal Reserve is decreasing the rate of inflation? Most of you probably already know, but let me tell this to the people that do not know. The Federal Reserve is decreasing inflation by raising interest rates and basically destroying the economy. The housing market is in the dumps. Business capital investment is down. The stock market it went into bear market territory. Easy money is gone. Cryptos fell hard. Negative GDP in the first half. Unemployment is on a trajectory to rise. So I'm not trying to ruin your day, but honestly, it's been a rough year for the US economy. That's because of the monetary tightening policies by the Federal Reserve. So on December 14th, will the Federal Reserve ease up? Are they going to initiate phase 1 of the Fed pivot? The Federal Reserve has been raising interest rates by 0.75% at each of their last 4 meetings. If they decide to slow down and raise interest rates by 0.5%, that would be the start of the Fed pivot. So you can look at the futures market to see the probability of that happening. According to the CME group, there's an 80% chance that the Federal Reserve raises interest rates by 0.5% on December 14th. So in other words, that's an 80% chance the Fed pivot starts on December 14th. Now let's do this. Now let's see if those market expectations are matching up to what the Federal Reserve Bank presidents and members are saying. So the Fed president of San Francisco, Mary Daly, she said that it is premature to take another 75 basis point rate hike off the table for the December policy meeting. So Daly is saying that there's still a chance that they might raise interest rates by 0.75% in December. Let me tell you what the Federal Reserve Vice Chair Lael Brainerd said. So she said that it will probably be appropriate soon to move to a slower pace of increases. That means that she's advocating to slow down and go with a 0.5% increase rather than a 0.75%. So she did leave some wiggle room by saying soon. Does that mean that she wants to slow down on December 14th or the following meeting on February 1st? Here's what the Federal Reserve Governor Christopher Waller said about the October inflation report. Waller said, "Everybody should take a deep breath and calm down. We have a long, long way to go to get inflation down. Rates are going to keep going up. They're going to stay high for a while. We're looking at moving in paces of 50 basis points at the next meeting or the next meeting after that." So the same thing, Waller left himself some wiggle room. He said that they're going to slow down and it's either going to happen in December or at the next meeting in February. Now, St. Louis Fed President James Bullard, he is a wild one, and I'll tell you why. Bullard said that interest rates may need to rise another 3% from current levels to 7% in 2023. So the interest rate is currently at 3.75% to 4%, so let's just call it 4%. After December, we're going to be at 4.5% minimum. Most people are expecting interest rates to hit around 5% tops next year. So Bullard is saying that it could go as high as 7%. If that scenario were to happen, that would mean that the Federal Reserve would have to raise interest rates by 0.75% in December and probably again at the next meeting and just keep going very hard. The market does not expect that, this scenario to play out. I'm also going to give you my opinion on this in a little bit. And I want to read you off the last one. This is coming from Kansas City Fed President Esther George. And George is saying, for me, the most important thing for this committee is being careful not to stop too soon. This was the lesson of the 1970s and 1980s. So George is saying that it's better to err on the side of caution and overdo it than underdo it when it comes to raising interest rates. So that's what the Fed members, the Fed bank presidents and the governors are saying. Let me know your interpretation of the situation. I'm going to give you my interpretation. The rate of inflation in October is at 7.7%, right? The November inflation report, that's going to be released on December 13th at 8:30 a.m. Eastern Time. The next day, so on December 14th, that's the Federal Reserve meeting. That's when they conclude, and that's when they're going to raise interest rates. So we're trying to predict how much the Federal Reserve is going to raise interest rates by on that day. Is it going to be 0.5% or is it going to be 0.75%? So is it going to be the start of the Fed pivot or not? By December 13th, when the November inflation report comes out, everyone should be easily able to predict what the Federal Reserve is going to do on the next day, on the 14th. If inflation is lower than 7.7%, then it's most likely going to be a 0.5% raise. In that case, the stock market, you can expect the stock market to rally hard. It's going to be an unsustainable rally, but the bulls, they're going to have their day. If the November inflation report says that inflation remained at 7.7%, or if it increased above 7.7%, then the stock market is going to crash so hard on December 13th. That's because it's going to be more probable that the Federal Reserve will go with a 0.75% increase, and it's not going to be the start of the Fed pivots. So that would trigger a nasty plunge, and we would be on our way to setting a new low for 2022. So honestly, we'll know by the 13th with a high degree of certainty what the Federal Reserve will do on the 14th. In the stock market, you can try to play these ups and downs, but regardless of the 13th and the 14th, I believe that in Q1 of 2023, the stock market is going down. So these short-term ups and downs, it really doesn't matter to me because I believe that we're not going to be out of the bear market yet. So if you want more details of the timing of the bear market and the bull market and why, again, please refer to my video from 9 days ago. Now, I want to give you some expectations and predictions for 2023, and we're going to begin with Goldman Sachs. Goldman is saying that inflation is going to fall hard and fast in 2023. They're expecting core PC inflation to fall to 2.9%. Their reasoning is supply chains will improve, shipping costs will fall, the cost of housing will fall. We're talking about home prices and rental prices. Commodity prices will fall, and there will be slower wage growth, which is going to bring down wage inflation. For these reasons, they are expecting the Federal Reserve to raise interest rates to a maximum of 5 to 5.25%. Let me tell you about JP Morgan. So JP Morgan's quant strategist, Marko Kolanovic, is expecting core CPI inflation to fall to 3.9% in 2023. JP Morgan is expecting inflation to fall dramatically in 2023, especially if we get a deep recession. Kolanovic said, after the strong CPI prints of the last several months, we believe inflation is heading the other way. Now, let me give you my opinion from my research. So I do believe that we hit peak inflation in June for this economic cycle. That's because the money printers have been turned off and interest rates have gone from 0.25% to 4%. When you turn off the money printers and you jack up interest rates like that, that's going to slow down inflation. But at the same time, it's going to damage the economy. So I think Goldman Sachs, they're being a little bit optimistic with a 2.9% inflation expectation for 2023. History shows, I mean, I've said this so many times, history shows that from peak inflation, it takes 2 to 3 years for inflation to go back down to the target 2% range. If June was peak inflation, getting to 2.9% inflation in 1.5 years, that's a very optimistic scenario. Additionally, last time when inflation was this bad, they had to jack up interest rates to 20%. So it's going to be challenging to get inflation down that fast when the Federal Reserve's bag of tricks is limited to jacking up interest rates to 5%. If the Federal Reserve, if they can pull this off, reach their 2% goal in 1.5 years to 2 years, I mean, that would be impressive. I would be so impressed. However, I'm very skeptical, but I wish them good luck. And for everybody that's been following along for the past few months, you know why that I'm saying that the Federal Reserve is limited to raising interest rates to a maximum of, let's say, 5%. If you're going to say 7%, that's pushing the limits, and that would have to be very temporary. The Federal Reserve cannot do that, what they did before. They cannot raise interest rates to 20%, not even 10%, because that would bankrupt the federal government. That's because the federal debt has ballooned in the past 40 years. So if you want more details about that, I made a separate detailed video about that, and I'm going to link that down below as well. So again, I'm very skeptical. I hope that this has been helpful. I completely understand that this is so much to just take in. So thank you for following along. I mean, I'm just trying to do my best to help explain this whole situation. If you need to rewatch this video again, please do so. I'm not trying to get you to watch this video just more times. I just really think that it would be helpful to you to get a grasp of the situation. And please check out our Patreon page. We're posting exclusive content there. And thank you for supporting our work. Thank you very much again, and I'll see you in the next one.